This plan was purchased back in the day, literally in the nick of time. Because when Sharad bought this policy, it was 9 months before he had the critical illness, the heart attack. The purpose behind a critical illness cover is to replace a loss of income that takes place as a result of recovering from a critical condition. To give this a better example, God forbid somebody ends up with cancer. Maybe the recovery period with chemotherapy and everything else could be a year and a half, 2 years. In that period, the individual may still have bills that have to be paid. Rent, mortgage has to be paid, education of the kids, etc., etc. And these are things that cannot be paid from an income which is non-existent. The purpose behind the critical illness cover is now to compensate for that and pay out what is required so that the family can continue to live a normal life without having to worry about recovering from the condition too soon and jumping back into work because there are cash flow issues. Traditionally speaking, critical illness policies were purchased alongside as a rider on a life insurance policy, which meant if you needed to have critical illness, you needed to purchase life insurance, and a component of that life insurance policy would be an add-on or a critical illness. As time has changed and evolved, products have changed as well. And what we're seeing available in the market suite today is you can actually go ahead and procure a plain vanilla critical illness policy only without the extra frills of life insurance coverage. I grew up in Dubai and I went to school in Dubai till the 10th grade. And Sharad was my classmate from the 3rd grade till the 10th grade. We came back to Dubai after finishing our university and college and everything else. As time evolved and we got clearer about what each other's role was in their careers, Sharad approached me to ask me to sort out things in the financial services space for him. At the age of 30, Sharad was at a point in his career where he was making the big bucks, right? He made this money based on commissions and salary, but he was also the only breadwinner in the family. And at that point in time, around his 30th birthday, Sharad also was in a very high stress environment. He wasn't paying too much of attention to his health. He had started smoking excessively because of the work pressures, and the 2008-2009 meltdown was around the corner, and this was affecting what he would earn and take away as commissions. All of this stuff weighing on his mind and on his health led him to have a heart attack at the age of 30. 9 months before this unfortunate incident, Sharad and me finally concluded a life insurance purchase and some money that he decided to put aside on a regular basis into a savings and investment proposal. So what Sharad decided with me was that he was going to purchase a life insurance policy, but not for $1 million of life cover and not with the critical illness of $500,000. What he decided was he was going to put aside money into other asset groups like property, savings, investments, and things like that, and purchase a bare minimum life insurance policy, which was about $200,000 of life cover and a critical illness of $100,000. This plan was purchased back in the day, literally in the nick of time. Because when Sharad bought this policy, it was 9 months before he had the critical illness, the heart attack. At that point in time, critical illness had a waiting period of 6 months after procuring a policy. So since this condition took place in the 9th month, Sharad was now owed $100,000 as a payout from the insurance company. Honestly, if you ask me, he got really lucky because usually when heart attacks take place at that age, it tends to be more fatal. The way a life insurance company would view this typically, and this is different for different companies, but they would not touch him as a potential life insurance prospect for at least 7-8 years. And in that 7-8 year period, they would need to see from him regular visuals and visits to the doctor and clinic and the management and the maintenance of that condition. And that's on the life insurance front. If I talk about a critical illness cover now, once you've been diagnosed as having a critical illness like a heart attack, you are a no-go for insurance companies for critical illness like a heart attack. It's quite possible with the new age development in the products that companies may be willing to offer you, for instance, a cancer cover if you've had a heart attack in the past. But the probability of you getting coverage for a heart attack, again, is unlikely. The value of critical illness that needs to be purchased is always an interesting conversation for my clients. So how do you go about purchasing this? Remember that the purpose behind the critical illness payout is not to take care of your doctor's bills. It's more to ensure that during your recovery period, your bills for your existence continue. So a good metric to purchase critical illness is more based on your expenditure than on your income. If you have an expenditure on a yearly basis of $100,000 and in your head, your justification is, I would require to have a critical illness cover for 2 years in the event I have a problem, or the worst case scenario, I might require 4 years of expenditure taken care of, then your multiple factor is 4, and if you're spending $100,000 a year, you need $400,000 of critical illness cover. When you're putting together that final number for life insurance, remember a couple of things. One is it's a moving target. Whatever your requirement is for today may change, is bound to change in the future. It could increase, it could also decrease as you accumulate more assets. Consider the fact that you've got an expenditure that needs to be replaced in the event you are gone. Consider the fact that you may have a mortgage or a collateral that needs to be paid off in the event you're no longer there. Consider the fact that you might also have some inheritance tax requirements on property and other assets that have to be paid off to revenue services. These are the other factors to consider while buying a life insurance policy. So while purchasing the life insurance policy, one metric is to consider what the insurance company is willing to offer you, and then you have another metric that says, this is what I need, and there is a sweet spot somewhere in between the maximum cover the insurer is willing to give you versus what you need right now. Consider purchasing a life insurance policy not as a one-time affair, but purchase what you can right now. And as time goes by and liquidity frees up more and you understand the needs better, add more to it.